Ladies and gentlemen, welcome back. This is Christopher Aaron. This is a special Friday weekend edition of iGold. We are going to look at what has been happening in the gold and silver markets with respect to the coronavirus. This has been one of the most volatile periods that I remember as an investor and a trader, going back at least until the crash of 2008. I think this is the most volatile period that I have seen since then. We have a lot of statistics to support that. This is a time where it is very important to focus on what the market is actually telling us. And I'm going to tell you that there are some scary things that I'm going to bring up in this video. There is a boogeyman, and I'm not specifically referring to the coronavirus, although we will look at that. With the boogeyman, I am talking about some signals that are appearing in the markets and some things that we should consider as precious metals investors and as global citizens for what may be coming here. And, you know, there's this line from a song, there are two paths you can go by. I will give a free 1-month membership to the first person who can fill in the next line to this song and tell me who it's by. But when you're faced with something that is scary, such as what I'm about to say, the information I'm about to present to you, when you're faced with something like that, there are two paths that you can go by. There is the path of the ostrich, which is to hide your head in the sand and to ignore the thing that is scary. If it turns out to not be a real threat, maybe that's a decent strategy. If it is a real threat, I'll tell you the ostrich is not going to survive very long, right? What is the other path that you can go by when you're presented with something that causes fear? It is the path of the lion. It is to stare at the thing that is so-called scary and to actually realize that perhaps if we just face it, it's not quite so bad. So, as we go forward right now, I'm going to ask you to take the path of the lion and to face what I'm about to present to you with a realistic outlook and consider if you should take some action based on the information. At the very least, I would tell you, do not take the path of the ostrich. That is not going to get you far with where we are right now. So we see the latest here out of the World Health Organization calling for nations to pull out all the stops fighting the coronavirus. This is not a drill. If we go back once again, just 2 months ago, who was talking about this? No one was talking about this. And suddenly this is the most important thing that we are seeing on the planet right now as far as what is impacting our lives, our health, our ability to travel. I'm hearing from clients around the world about ways that they're being impacted by this. School cancellations, we're hearing about flight cancellations, we're hearing about businesses being shut down or having to curtail importing of products or raw materials. So this is absolutely affecting human beings, let alone the death toll and the illness. And then we talk about the business side of things. This is really having an impact. And is this over? Is this done right now? Is the panic over? Let's be honest. No one knows. Not me, not you, not the director of the World Health Organization. Nobody has the answer at this moment in time about how serious or how bad this is going to get. So, knowing what we don't know, then we can look at what the market response is to periods like this. Now, we're going back 1 week. This is the chart from 1 week ago when the market was in the full-blown panic. And I want to draw some very important things to your attention here. Look at the way that all of these diverse asset classes basically moved in the same direction. I'm talking gold down 4% during the panic. Did not serve as a safe haven last week. Commodities down almost 8% for the week. We're talking about an average of world commodities, including industrial metals and energy and agricultural commodities. Silver down 10% in 1 week. Absolutely not serving as a safe haven. Remember, I said, do not turn away. Do not bury your head in the sand from the information that I'm providing right now. Look at it, digest it, take the weekend to think about this, because I'm telling you, some calculated, prudent action here is going to be very beneficial for you when you grasp what we are actually seeing right now. Stock market, worst week last week in 12 years. You have to go back to the crash of 2008 to see a week worse like this. And the gold miners, absolutely, when you see gold down and stocks down, gold stocks leveraging losses to the downside. What was the one thing that benefited during this? U.S. long-term bonds. Fiat paper serving as the single safe haven during this crisis. Now, you have to ask yourself, is this crisis over? Have we seen the worst of it? Or is this going to continue? If that is the case, gold, silver, the gold miners, stocks, commodities are not what is going to protect you in this. We are seeing evidence for that right in front of our eyes. This does not have to make sense logically. You can say, well, gold should be going higher amidst the fear. It shouldn't be government paper. The U.S. already has too much debt. I agree with you on those things fundamentally, but that is not the market's reaction. Ignore the market's reaction at your peril. This is, once again, if we want to ignore that, it's like being the ostrich as a predator is coming by and saying, I'm not going to pay attention to what's actually happening. I'm going to bury my head in the sand. Don't do it. This is serious. We're seeing government paper serve as the safe haven. Now, we have to put this into perspective. What is this? This is deflation. When we see all these asset classes moving together, gold, commodities, silver, the average of U.S. stocks, when we see everything moving lower together and fiat paper moving higher, this is deflation. This is all asset classes being treated as one with the sole exception of paper. This is an instinctive reaction amongst participants, and it doesn't matter whether you're talking oil, natural gas, soybeans, gold, Amazon stock, Netflix stock, gold miners. They're all being treated as the same thing. This should be very clear to see. That is the definition of deflation. We have not seen an episode as strong as this since 2008, and you really need to ask yourself whether or not you think this coronavirus is done. Have we seen the worst of it, or is there more to come? Now, let's bring up the silver chart. We were talking about this 2 weeks ago. We were right there. Silver made an overnight spike, and I was getting some messages 2 weeks ago. People were saying, hey, it's broken out. But remember, from the video from 2 weeks ago, I was saying to trigger this, we need to see a weekly close. I said that in the video. We needed to see a weekly close. We did not see a weekly close. We saw a daily spike above and then a strong reversal back under. This is what we call, this thing right there is what we call a false breakout. Again, it's where a market spikes above a certain level that we're watching, a very clear 3.5-year resistance level here, right at the 1860 level. It's where a market spikes above it, and then it fails to hold that and reverses down below that. That is called a false breakout. Now, we are at support here. This is that long-term rising trend. But we saw, come back to that last chart. We saw the market reaction to the coronavirus. That was a 1-week reaction. Again, ask yourselves, do you think that reaction is over? If it's not over, silver is going to fail here within the next couple of weeks below this long-term rising trend, and it is going to trend lower for some time after that. I mean a significant amount of time after that, because that would be a A failed head and shoulders, inverse head and shoulders breakout from a failed pattern should come a strong pattern in the opposite direction. With this weakness in silver, I want to update you on one of those signals. And this is where I said, nothing I'm presenting here is supposed to make you feel comfortable. But I'm giving you the raw, hard facts in the data because I guarantee you all those other channels on precious metals are just going to say, this is nothing. This is just a temporary correction. Soon we're going to spike up to $50 or $100 in silver. Gold's going to be above $2,000 soon. The same old story, right? We are seeing evidence to the contrary for that. I am going to urge some calculated action on your part. This is the data that I want to prevent you from ignoring, and please take a look at this. With that weakness in silver, this is major macro focus that we're talking about. With that weakness in silver, the gold to silver ratio is breaking upward at this time in favor of gold as gold is clawing its way into the target zone that we have had for almost a year now. This target zone has been between 1711 and 1823. We are approaching that right now. The gold to silver ratio is breaking upward as gold is moving higher. Not what it did as gold was moving higher during the bull market of the 2000s, which the ratio was moving lower in favor of silver. We are seeing the opposite right now. We are seeing a break upward. Have we ever seen this before in the markets? Yes, there is one other time. Before I get to that target, I want to show you the one other time that this has happened, where we have seen a ratio breaking upward as gold had a move similar in amplitude. This was from 1985 to 1987. Notice after the peak, gold had come all the way down, and gold made a 90% amplitude. That would be equivalent to gold exceeding this target zone. We have not yet seen, this is a 60% amplitude that we are seeing presently from the 2015 bottom till today. A $600 rise above 1,000 is 60%. This was a 90% amplitude, 275 to 520. So a greater amplitude. What was the signal? Once again, the same thing that we are seeing now. A multi-decade breakout above the gold to silver ratio. And we have a target for this. This target can be measured by an amplitude of the ratio below the breakout point added on. This gave a target of 77 on the gold to silver ratio, which at the time was unfathomable, right? You had a gold to silver ratio that had gotten no higher than 47 here for about a decade. And when we had that legitimate breakout here, people were probably saying, hey, silver, the ratio is very favorable for silver right now. This is the time to buy silver. And the ratio was breaking out. And let's zoom this entire thing out. This ends in 1987 now with the breakout in the gold to silver ratio as gold was trying to move higher. The exact same thing that we're seeing right now. Let's zoom this chart all the way out. There was that last data point as the ratio was breaking out. What was this a foreshadow of? Gold moving lower for over a decade after that. Same thing with silver, despite those attempts that were quite significant in the 80s to start a new bull market. By the way, silver doubled in value here in 1987, right at the end of gold's move. It was a false rally. The warning of that was the gold to silver ratio breaking upward. And notice that target of 77 was achieved on the ratio. We are seeing the exact same thing happen right now 33 years later. Did I get that right? No. 87, 97, 2007. Yeah, 33 years later. This exact same thing is happening at this moment as we are speaking. Gold is trying to get back up to this target zone here, not even matching this amplitude. So this is not as dramatic as what we saw in the 1980s. And the gold to silver ratio is breaking out. We have a target right now for the gold to silver ratio of 138. This is a legitimate target. This is defined. This is based on the amplitude of the consolidation below this breakout point. If gold were to fall back to 1,200, we would be talking about silver below $9 an ounce. That's what that ratio predicts. This is a valid target at this moment in time. And so this model, this very clear signal that we were seeing here, calls for gold and silver to be forming significant tops. We had a false breakout in silver. That was not a legitimate breakout. We are seeing strong reversals in the other direction. The coronavirus is causing deflation around the world. We are seeing that gold and silver will be sold with the rest of the commodity complex in a strong deflationary environment. We have already seen evidence for that. And we are seeing the same signal setting up right now as happened in 1987. Back to that analogy again. The ostrich or the lion. I encourage you, I am presenting to you information that may cause some fear, and it should. Because this is a negative setup. It had the potential there about 2 weeks ago to really turn into a significant move, and it failed. After a failure, the models change. So what I'm saying to you right now, face your fears. This need not be bad as it could be. This could actually turn into a good thing if you consider what I'm saying and if you take some calculated defensive action. I'm not saying you have to sell all your precious metals. I am, though, saying depending on your situation, you should consider selling some of them. When we talk about gold above 1,600, we're certainly not at a low. The low was just above $1,000 5 years ago. That's when I started my channel. We are now $600 higher than that, and we are seeing negative warning signals across the sector. If you are heavily exposed to the sector right now, you should consider some defensive action depending on your situation. The last thing that I want to emphasize for you to do is to take care of yourself physically. Physically, mentally, spiritually. Everything is related. In these times where there's so much uncertainty and so much volatility, perhaps it makes sense to limit some of your risk in the markets. Perhaps it makes sense to sell some of your positions to pare down your risk profile. And once you do that, you can breathe a little bit better and you can start taking care of yourself, because ultimately, if our health fails from the coronavirus or anything else, then we have nothing on this planet as far as that goes. I do believe we will have more after these lives in one way or another. That is a personal belief of mine. But on this planet, we should take care of ourselves right now with what we are seeing foremost. If you would like to learn about the exact things that we are doing here, the defensive positions that we are opening up in the precious metals, the way that we are analyzing the other markets as well, including the potential for a crash in the U.S. stock market, this is called Precious Metals Intelligence. You get videos like you're seeing right now, and the one that just went out last weekend was like this, but 1 hour in length. We covered a lot more depth. Not only silver, as we covered here, not only the gold to silver ratio, we covered the gold miners, we covered the U.S. stock market, we covered the bond markets. Major moves happening in U.S. bonds, as we saw in that first chart. That is all available to you in the Precious Metals Intelligence service. If you would like to talk about formulating defensive strategies for yourself based on this information, if you are too exposed, and only you know that, only you know whether or not you are too exposed to these markets. I can't tell you that. I can give you ideas, though. If you're 100% in the precious metals at this point, And if you're not a really young person that has, a decade or two of time on your hands, I would say you are probably overexposed. And then we can talk about how to limit exposure. We can talk about defensive strategies. There are option strategies you can pursue. Put options can be very useful in protecting a portfolio if we get a down move like I expect that we will. There are inverse funds that you can buy that will rise if the precious metals fall. You can profit as the precious metals are falling. So consider some of these things. And if you'd like to speak to me, Christopher, one-on-one, know that you can reach me on the Consultations tab. I take no funds or no fees from any of the companies, any of the dealerships. I simply speak with individuals and we cover strategies. Strategies that make sense given the uncertainties in the world. No matter what you do, make sure you hit the subscribe button. These videos I'm trying to put out as often as I can, but as you can see, when things are so volatile in the planet, my first priority goes to my paid subscribers. That's just how it is. But to be notified when these free videos are coming out, please hit the subscribe button. And if you'd like to give a little thank you on Patreon, I absolutely appreciate that. Extremely volatile period we were in. This need not be a disaster. We are seeing negative signals. Go back to that gold to silver ratio. Go back to the first chart that we looked at in this video. We are seeing strong signs of deflation. And ask yourself if you think this is over. If you don't think that it's over, we saw how silver and gold are responding to deflation last week. Consider some calculated defensive action at this point.